morning, everybody. Welcome to this edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys had a great day yesterday as we saw a bit of a pullback in the market. Not overly shocked and surprised, but we're going to take a look today at some of our educational setups from the Nasdaq, S&P, crude oil, and gold markets, as well as maybe some others that are breaking out, giving us some trade opportunities. So let's dive in. S&P this morning down about 12 points. And, we looked at this one the other day and said, well, we're in a bigger picture uptrend for a day trader, right? As a day trader, your 4-hour trend is up. But one of the things that I've been stressing for a while is that the move up that we had last week occurred on much, much lower volume, right? So if I throw the spiders on here and I put the average volume on the SPY, you'll note that all of the movement from last week when we had this bullish move was below average volume. Now, yes, it was also below average volume, which is not unheard of in summertime, but the fact that we had that below average volume on the rally and we rallied up to a prior area of support, old support axis, new resistance, and we rolled over yesterday, did not bring yesterday's price action to to a big shock factor. And so looking at the ES this morning, we're down about 11 points. I think that the better probability is that we continue to trade down and then just wind up getting below this 36.45 off of the daily chart. So when I move this to, say, the 1-hour time period, let me get rid of this volume. We don't need that anymore. We did come back to this 15-minute area of demand yesterday. And if we look at this 15-minute area of demand, this gave us a decent entry, right? We really did. We came into it with some good move, hit it 1, 2, 3, 4, 5, 6 candles later, we immediately got stopped out. Now, if you didn't get stopped out right away, because maybe you thought, oh, I'll give it a few minutes because my stop is going to be below this candle's low, well, it hung around there before then falling through. And so then we moved to the next hourly level of demand. And the next hourly level of demand, we hit that one in the overnight, and we've just been chopping along sideways. So what this tells me is that our next most logical move would be for price to continue to break down below this region and for price to keep falling, okay? Now, look at that on a 1-hour chart. It's a little bit cleaner and easier to see. We also have a little wick over wick area right here that I think is really worth paying attention to. Now, here's what I like about this wick over wick area if we rally up. If we rally up, this little wick over wick area is, by its very definition, a bull trap. A lot of bullish traders are going to get long on the breakout above this high, the Globex high, but there's a really clean supply area sitting there. So I would say that either one of these, the short below 38.15 or the short at 38.43, both make for pretty good entries today. Now, as far as demand levels below me, my 4-hour chart still does have some strength to it, but I don't have any clean demand until down here at 37.30. So 37.30, you've got some pretty clean demand, and that would be the next place that I would look. In the NQ, the Nasdaq also broke through this hourly demand level fairly quickly. And that's actually lower than where we are in the S&P. So I would basically wrap my lines around the same area in the Nasdaq as I did in the S&P for a potential reversal on that short side moving forward. Looking at the Russell 2000, also similar picture. We do have another area of demand that we're coming close to. This certainly is DTM. We're basing in front of the level, telling me that a little bit of a rally up this morning puts me into a closable spot. Next, taking a look at our energies and metals. So taking a look at crude oil first, we can see that crude oil had a little area yesterday that was resistance, and we poked just above there for just a moment. Poked above, chopped sideways, and then pulled back down just a little bit below the entry. And by doing that, what we've really done is really set ourselves up that it's going to be another grind higher. So my best guess is that price continues to move a bit higher. If you want to try another breakout, look above 112, because your next most obvious price target is this area of supply that exists up in this region. Now, we didn't get a big follow through on the breakout yesterday, but it doesn't mean that the breakout move is over. 4-hour trend is still, it's moving up now that we got a higher swing high. I don't officially have a higher swing low as of yet, but I certainly have a slightly higher swing high that I can kind of lean on and pay some pretty close attention to. Next level worth taking a look at would be this area here in gold. So looking at gold, we had looked at an iron condor, and the iron condor that we looked at in gold is between 1870 and 1790, so certainly still very much in between there. Now, in the meantime, we've dropped down into this little 15-minute area of demand. So this 15-minute area of demand is off of this rally-based rally. We actually just bounced into that in the last few minutes, and we're 3 candles into our 6-candle rule. Now, you can see this is a pretty violent candle that came into that level. So my guess is most people didn't get into that position and weren't able to take advantage of any of that move. And frankly, it may not do much out of that level. But if we do rally back up, this 1821 by 1823 does look to be a pretty good and consistent entry. Now, the last level that I want to take a look at this morning would be in the bond and currency markets, specifically our New Zealand dollar breakdown. Now, we talked about this symmetrical triangle pattern that had formed in the New Zealand dollar, and we did break down below this to the downside. So it gave us a pretty clean entry on the New Zealand dollar yesterday, and price has continued to drop since that entry. So if you took advantage of that, I think at this point you've gotten a pretty decent little move. I would say that if you want to still, move in on this one and take advantage of kind of that potential move down, your next entry would be at this little tweezer top on a pullback right back into this region here. And then the Japanese yen is sitting in front of its next potential breakdown right there at 73598. So look below a breakdown at this 73598 area as a place to get short. So other than that, that's all I have for today. Hope everybody stays safe in those markets. Keep an eye on your accounts. And if you have any questions, as always, shoot us an email, support@tradersarmy.com. Until tomorrow, everybody, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.